Welcome to the Top M&A Entrepreneurs. Today I have a guest, is John Taylor. I came across John Taylor probably 2-3 years ago. He had a book out called, he has a book out. Go to LinkedIn. It's got a fantastic title, Maximize Your Multiple. And this is really important because, every investor says, hey, you buy a company at 1x multiple, but if I grow the EBITDA, add some software, add some recurring revenue, I'm going to maximize my multiple. So welcome, John.
Thank you. Good to be here.
Yeah, so John works for a company called BGSA Holdings right now, and they do a lot of acquisitions or getting a company's investment advisory for supply chain. Let's go all the way back and how you got involved in M&A.
Sure. So I graduated from the Wharton School in Philadelphia, University of Pennsylvania as an undergrad. And so started off working merger and acquisition advisory with, mostly tech companies in kind of the late 90s is when I graduated and, got my feet wet doing M&A deals, doing some capital raise type work. So, mostly with middle market type businesses, right? So, middle market, there's lots of ways to define middle market businesses, but typically, kind of under, say, $100 million in sales is where, kind of most people look at middle market.
Have you ever thought about buying one yourself? You're so involved in the acquisition process.
I have, yes. Or even just investing in some of the transactions that we work on, maybe, just rolling some equity into a deal.
Yeah.
I have. I have invested in some small transactions in the past, but it's something I'd like to do more in the future for sure.
Yeah. I got a question for you. Do you work on the seller side with a seller mandate or a private equity, institutional or strategic target mandate? Saying, hey, these guys will say, here's my menu, here's what I want, go get it. Or you say, develop a relationship with the seller and let me know when you're ready.
Typically we're working with the seller. So yeah, 90 plus, we have worked on some buy side work in the past, but we like working on the sell side. And so we're always trying to develop relationships with business owners and CEOs and people that might be looking to do a deal in the future. So yeah, we're mostly working with the seller.
How do you reach out to them and stay top of mind awareness that John Taylor, BGSA is the company we want to sign with?
Yeah, no, it's a great question. And something that, we're always trying to think of better ways to do that. Right. So I think it's mostly about just staying in front of people over a long period of time, because, typically, if you look at privately held businesses, on average, they might get sold every, say, 20 plus years. Right. Because, the typical trajectory is somebody, starts off their career in a corporation, usually a large corporation. They might go off and start a company mid-career, and they're usually building up that business over, say, 20 to 30 years. And then they're looking to sell it around the time they might want to retire. So when they're kind of, maybe late 50s, 60s, it's funny. I run into business owners all the time that are, kind of well into their 60s and 70s in some cases, and they're still not, I'm like, hey, you interested in considering a sale in the near future? And they're like, hey, I'm not even thinking about it, which is kind of funny to meet people that, are kind of at an age where you'd assume they'd want to retire. But I think a lot of these people, it's a typical entrepreneur. They like what they're doing. They're motivated by it. They don't necessarily want to retire, right? They can kind of set whatever schedule they want because they're the owner. So, But
what's the bucket that they get into? I got to figure out this. Like, is it it's easy to say, hey, I want to work with that one seller. Goes like, well, look, I'm the entrepreneur type, right? Serial entrepreneur. I want to sell that and then get the highest multiple. And then there's a guy like you just mentioned, the 60-year-old guy. Like, well, I'm not even thinking about it. And then it's 6 months later, 3 months later, some life-changing event, cancer diagnosis, or kid needs to go to college, or wife just says, hey, I'm tired, I'd like you home, let's go travel. Yeah.
Right. Yeah. There's all those things, which is why keeping in touch with people is the way to do it. Right. So I think that, if there's certain industries where we've done more transaction work than others. So getting to know the industry, going to the trade shows that industry might host, across the country, publishing research on particular industries, or, a lot of it is just sending people emails and, calling them every, say, like,
Hey,
6
checking
months.
in. How you doing? Yeah.
Yeah, checking in with people, right? Yeah, so it's all those things. Getting referrals. I mean, developing referral sources with attorneys and accountants. So, yeah, I mean, I think that there's all different ways to find people, but I think it's all about just stay in front of people, and eventually someone's going to do something.
So is this very similar to like a real estate agent? They want to book the listing and say you get them under some kind of contract and you have them for what, 6 months or a year to find a buyer?
Yeah, that's right. That's right. Yes. I mean, typically, you're looking to sign a contract and kind of represent the seller in the deal and help them get the best terms overall, and negotiate and negotiate a deal to the end. And so, yeah, I mean, typically you're looking at 6 to 12 months to get a deal done. I mean, typically you're looking at closer to 9 to 12 months. I mean, really to get a deal closed from start to finish, because there's a couple months of preliminary work. The marketing takes a couple months, and then even once you get a deal signed, I mean, you're looking at 90 plus days of diligence. So you're talking about many months, close to a year, really, to get a deal done.
Yeah. How does like somebody wants to come in your role and say, I love what you're doing there? How do you get paid if it's just based upon kind of transaction? I gotta find a buyer, I gotta sell, or is it like real estate where, dude, it's 100% commission?
No, I mean, typically we charge a monthly retainer, so
Okay.
we cover some expenses, right? I mean, most of our compensation comes as a success fee at the end, similar to a realtor, right? But there is a lot of work. I mean, it's not like in real estate you could just, a realtor's just going to stick your house on multiple lists. I mean, obviously they'll take some pictures, and I don't want to minimize what they do, right? Because they do spend money to hire a photographer, position your home, but I mean, really, it's there's a lot more investment that goes into selling a larger business, because it's a very kind of proactive. There's no comparable multiple list service in the M&A world.
Yeah.
I mean, there are some sites where you list like smaller businesses, but typically it's a very exclusive type process where each buyer is qualified beforehand. You have to develop very comprehensive marketing materials that have a lot of specific details that have to be included to answer all the questions a buyer's going to have. So, it's there's a lot more time and investment that goes into it than marketing a house, right? So that's why we ask for some type of retainer. Usually, I mean, our retainers aren't big; they might be $5 to 10 grand a month for 6 months or something like that. But most of our compensation comes in the form of a success fee at the end.
When you say investment advisory, do you, let's say, take an example, a company, 60-year-old guy comes up, it's time to sell. I've got a $7 million company, 1 million EBITDA, which is pretty good, but he would get better if he did these few things, like just go acquire a couple companies. Do you also help them maximize their multiple on that?
We do, yeah. I mean, in some instances, if there's some kind of no-brainer type things that they could do to help better position the company, because we've had clients where we were in early conversations with them, and they lost a very large customer that was a big chunk of their sales, or they had a large return from one of their customers, or they ran into some type of financial or customer issue, which would make it very difficult to market the business, right? And we'll often say, hey, look, what we need to do is really focus on the business, focus on turning it around, focus on continuing to grow it. And then you'll be in a much better position to get a deal done, because we try to be upfront with people and say, hey, look, given your current circumstances, this is where we think that the market would pay for it. So if you're not happy with that, you're better off just waiting and turning things around and working on the business before taking it to market. Yeah,
I got to ask you about the top of your funnel. I mean, is this still kind of correct what you're talking about on page 43? I took all these notes on here. 514 buyers contacted, 98 NDAs, 14 indications of interest, 6 presentations, 2 letters of intent.
Yeah, I'd say that's kind of an ideal type process. I mean, typically, a lot of those are going to be financial buyers, right? I mean, oftentimes it's hard to find more than, say, 50 to 100 qualified strategic buyers in most industries. So, the majority of your buyers list is going to be financial guys, private equity firms, because there's lots of those folks out there. I mean, there's been a real proliferation in private equity groups in the last,
what is it, like
10 years.
$13 trillion ready to go to work? Yeah, or something like that.
Yeah. It's a ton of money, right? I mean, there's a lot of money out there, and people looking to invest in the, privately held businesses that have good growth potential and profitability and so forth. So, but I'd say that's very typical. I mean, we like to go to a large group of buyers, get as many bids as we can, and present the owner or seller of the business with as many options as possible.
I used to work for Intuit. So, that's a lot of small businesses, but it was larger. Now, a lot of these guys just don't have their financials in order. What do you guys do for that? Do you bring an accountant in or a CPA in and kind of clean them up too also?
No, good question. So oftentimes we recommend having a quality of earnings report done for the business. So quality of earnings reports, you can get them from, major regional type accounting firms offer quality of earnings reports. I mean, typically you're looking at, 30, 40, 50 grand to have that done. And that they'll basically take the financial statements, and it's almost like a mini audit, right? Where they'll go in and say, hey, these are the potential add backs to the business. They'll look at the accruals on the balance sheet and just make sure that the financials really reflect the true profitability of the company. So yeah, I mean, we do recommend that. We look at financials ourselves. We ask a lot of questions about the P&L, the balance sheet, to make sure that all the questions that a potential buyer is going to ask, so that we know up front what any potential issues might be.
Do these guys sign, when they sign a document and they pay you to help them sell, or is it, right? You said the 5 to 10K. I'm just curious about that. Yeah.
Yes.
Okay.
Yep.
Yeah. And are these companies that they are looking for mostly private, or some of them publicly traded? Like, the kind of crap that was going on with the OTC markets with the PCOAB, the 211C, 15C.
Yeah, I would say, I mean, most buyers we talk to are, private equity firms. They're looking to own. I mean, there are some private equity firms that take public companies private. I mean, we've done a little bit of that work in the past, or at least I have with other, in other careers I've worked in the past. But I mean, right now we're mostly focused on, working with privately held businesses that are looking to have a buyer that's going to hold that company privately as well, whether it's private equity or strategic buyer. I guess there could be some publicly traded strategic buyers, right? So yeah, I mean, you could sell a private company to a public company.
Yeah, I used to do some capital raises in the OTC market, and it just, with the 15C 211 that came on, it just, there's so much crap in the OTC market. That's why I was curious about that. Most of them just go, hey, you know what? Save $20,000 a year you're paying to OTC markets. Just go private. Makes sense, right? Yeah.
Right. Yeah. Yeah.
You don't have any trading volume, and your share price is crappy. So just go private.
Right.
Yeah.
Right.
Yeah. Why did you guys focus on supply chain? You've got the supply chain index. Is that a huge trending industry that it's got a lot of different niches?
It is. I mean, it's been in the news a lot lately, right? I mean, there's been a lot of issues around supply chain breakdowns. I mean, it's not necessarily the company's fault. I mean, some of the issues lie at the different manufacturing or raw material sources, but yes, supply chain, trucking businesses that are trying to get products to market, either to retail or manufacturers, moving around raw materials and goods. So I mean, it's an important aspect of the economy. It's a big part of the economy, but something that maybe doesn't get a whole lot of attention.
Yeah, Amazon's charging 5%, and Walmart's paying their drivers $105,000.
That's right. Yeah. No, the what a trucker can earn these days has gone up significantly. Just because of some of the constraints. It's hard to find qualified drivers, right? People that want to do. There's all this news about how all these trucking's going to get automated, right? You're going to have robots driving trucks, and so it's not an industry that necessarily is seems like a good career prospect. But look, I mean, obviously truckers are a very important part of the economy. I mean, it's how most products get to market and get to retail shops these days. So they're a critical part of the infrastructure, and they're a lot of them are making very good money these days.
What kind of niches in that industry are you looking for to say, hey, I'm kind of looking for, software technology that manages drivers into independent drivers or something like that?
Yeah, all the above. I mean, it's an industry that we've done a bunch of deals in the past. So yeah, I mean, technology certainly, even more traditional truck brokerage. Asset light type people that don't own the vehicles themselves. Maybe they're brokering those types of services, or people that own the equipment that's actually moving it around. So yeah, as well as the technology. And there's lots of segments. There's the trucking aspect. You've got ships that move ocean freight. You've got air freight, right? So there's lots of different segments.
Yeah. What kind of license do you have to be an investment banker sitting where you're sitting?
Sure. So we have securities licenses. So Series 63, Series 79. I mean, those are the main, kind of state. Used to be the Series 7, but I guess the 79 has become kind of replaced the 7 for investment bankers and M&A advisors.
I'm really curious. I do a lot of work on LinkedIn, and a lot of companies come to me saying, hey, I got this company doing this, and great. I need to find a home for it. Do you guys pay bird dogs or commission or set that up or what?
Yeah, I mean, we've worked with people that are looking to, if they have potential buyers. I mean, we've worked with them in the past and show them kind of different deals that we know are in market, or clients that we're working with. So
are you allowed to?
Yeah,
there's like in the SEC or FINRA saying no, you can't pay bird dogs or yeah.
Yeah, I mean, typically if someone's out hunting for deals for a buyer, typically the buyer pays them a fee to do that, right? Typically they are on a contingent basis with a buyer, so they'll get some small percentage of the deal. But yeah, I mean, we'll sometimes share deal flow with those folks if they know some good qualified buyers that perhaps we haven't connected with. So yeah, I mean, those people can be very valuable.
Yeah, this is, great conversation. We're already 30 minutes into it, and I just want to appreciate your time. And if you guys happen to get on Amazon and get this book, Maximize Your Multiple, this is everything you're talking about is just acquiring companies that help you increase your multiple to get a bigger payday. Yeah. Jon Taylor, I really appreciate the time here on Top M&A Entrepreneurs.
Sure. Thank you. Thanks so much.
All right. Take care.